is Sunday, April 12th, 2020. We're here with Game Plan Sunday Live. We're going to talk about the markets, what occurred over the past week, what we noticed coming down the pipeline this week, and how can we use that information to strategize and make some money here. All right. So last week was actually pretty interesting. Again, we had lots of negative economic data. However, the markets did get a nice rally. So I think we had like the best week since 1974 in the stock market. Meanwhile, we had record levels of unemployment. 16.7 million people out of work right now. So what you guys are seeing is the stock market is detaching from the real economy. So the stock market is really not, reflecting what's happening in the economy itself. So still lots of manipulation is going on. So again, one of the common questions that we get every week is, hey, is that a real rally or is it a fake rally? Well, we don't have any fundamentals. We don't have any economic data. We don't have anything that's driving that. Then it's more than likely a false rally. So can you make money in those rallies? Yeah. But more than likely, you're going to have to day trade those rallies to really make money. The swings are going to be tough to play out with this level of volatility still in the game. So you get in, get out. You may have to take smaller profits to really navigate this thing. Take your profit target from 50%, that's our target. But you got to go for the 20% right now. Get your 20. If you can get a 20 in one day, you might need to call it a day because the rallies that we're seeing are just not real. They're not attached to anything fundamental. Okay. So coming off of last week, we talked about the situation with oil. As soon as the market started out this week, we had the oil situation to pop off. And if you guys remember last week's video, we talked about, I was talking about my friend who works at Shell, and he's talking about the whole situation with Russia, Saudi, and America. So you guys understand the dynamics behind that relationship. It still kind of fell apart, throughout the week. We just got, was it news today, I believe, that Mexico, I think it was Friday or Saturday, Mexico wasn't on board. And now they finally got Mexico on board today. So looks like all the countries are going to be moving together to cut oil output, which should actually make the prices rally. However, as we're looking live, the prices are still not rallying right now. Let me pull up the oil. All right. So we're looking at oil right now. So, typically you'll see if they were to cut oil, then you'll see that the price should come up, but we're not seeing that right now live. We're still, teetering down. That doesn't mean it's going to be this way tomorrow. Being that I got, a buy trigger here, but that's a conflicting signal. So again, Monday is just one of those wait and see games to see how, what kind of emotions come out of the market on Monday. It'll be an observation day for me, again, to see how this thing plays out. So again, here go the levels that we have all the way to zero, okay? Which pretty sure they're not going to go to zero here with the oil. But we know that this right here is the floor. And so what we're trying to see if this thing is going to come up to its 50-day moving average, which is about $35 a target, right? So you can see that right here. If not, if it fails, then we'll go back, test these lows. All right, so we'll come back and test these lows here. And then if it come back and test these lows, then more than likely it's going to fall even further. And there has been reports, people expecting $10 oil prices. I don't have any targets on that yet, but I do have a $13 target down here, which again, that will be really, really bad. So being that they're actually cutting the output, should see it rallying, but we're not seeing it right now. So I don't really know what to expect coming from that. But that's going to be an interesting scenario. All right. Excuse me. Okay. All right. So that was pretty much the name of the game last week. What's coming down the pipeline this week? Let's see. Well, we have earnings. So earnings season kicks off. You guys know every earnings season kick off with the financials. So we'll have the banks. They're going to come in to play the earnings. And we're going to learn a lot about, the economic situations or the financial situation of these companies, these banks, from the earnings report. So we got, let's see, Monday, nothing on Monday. Who we have? We have Tuesday, JP Morgan and Wells Fargo. They're going to be reporting earnings. And then on Wednesday, we're going to have Bank of America, Citigroup, Goldman Sachs, PNC Bank, And then Thursday, we're going to have Bank of New York Mellon. BlackRock is going to be reporting as well. Friday, Schlumberger, State Street. Those are like the earnings reports that we're getting this week. That, that's what, investors are going to be looking for. Earnings are projected to be terrible. So again, I don't have any positive news on that, but maybe that's already been priced into the markets. We'll see, but it should be all bad news. So most of the news, again, is going to be bad. The economic data is already bad. Don't really see much anything positive, except for we got the Feds that's back in the markets. And so we'll kind of see how that's going to play out. I was listening to IMF head Kristalina Georgieva, and she had a very grim output on the markets, her outlook on the markets. And they said actually supposed to be releasing that on Tuesday. But she was actually talking about, let me see, I made a couple of notes about it. She said this is the worst economic fallout since the Great Depression. They were projecting, I think, like about 3.3% growth. But she said all their models were turned over on their head. All of them was turned over on their head. And that they're expecting over 170 countries to have negative per capita income growth this year. I know also she was saying that they expect that recovery may come in 2021. That's what they're trying to forecast. But they're saying it's an exceptionally difficult year. They were saying, she was talking about the debt burdens of a lot of countries. They can't meet their debt burdens, meaning they can't pay their debt. See, these are some of the things we was talking about, how the economy was so weak. It was too much debt, over debt, too much debt. And coronavirus is the pin to cause the financial collapse, right? But the bubbles were already in place. The bubbles were already astronomical. IMF has been given warnings. We've been talking about this all 2019, how the debt levels were too unsustainable and specific to a lot of these countries, including America. They were saying that last year. What else she was saying? She was saying, she was talking about countries like Africa, Latin American countries. They're going to be hit the worst because they're not really prepared for this type of crisis that we're going through. And they're already over, drowning in debt already. Those are pretty much the main things. So again, this is, the head of the IMF. You definitely want to pay attention to her when she speaks, because, that's the IMF. So she's the top dog, Georgieva, Kristalina Georgieva. So that was something that came out last week. What else? This is interesting. I caught a couple of different things from some economists, and they're saying that, let's see, they said the damage done to the economy. Nobody knows the damage done to the economy by COVID-19, right? And they're saying that the recovery could be V-shaped. It could be swoosh-shaped, U-shaped. Many letters are being debated right now. So the economists don't even know, right? They're debating on what kind of recovery we could be expecting. They said the worst case scenario is an L shape in which the economy doesn't bounce back at all. So you have all this level of uncertainty. Nobody has a clear direction on where we're going. Right. So Mia says, yeah, they're reporting that they're getting their stimulus checks. Yeah. So again, people are getting their stimulus checks, and that's good. I think that is good that people can have some money to try to survive, but it's $1,200. It's really not much. It's really not going to go far. We have record levels of, last week we had record levels of people that did not pay their rent, right? People did not pay their rent and pay their mortgage. This is terrible. It's really terrible. You're talking about almost 17 million people that's out of work, right? I made a couple of posts on my Facebook page was talking about, because, a lot of people talk about all these, different things that are like golden to investing. Like real estate is the best when it comes to investing. But if the rent man can't collect, real estate man can't make no money. So again, nobody is immune to what we're actually going through, right? We're all connected in this, right? We're all connected in this. But yeah, the $1,200, again, Trump and them, they're already working on another bailout because they already know that the $1,200 isn't going to go far. And the purpose of the $1,200, you got to remember that the purpose of the $1,200 that you're supposed to be getting is to help stimulate the economy. It is to influence you to go back and spend money, come out in the markets and spend the money, right? Because one person's spending is another person's income. When you spend money, that business, they're dependent on that as income. The same thing with your landlord, whoever's the real estate guy, he's dependent on you to spend money with him so he can make money. But with this kind of fear that's happening, see, this Again, this kind of take me back to my studies with Hayek and Keynesians, the school of economics, a different school of economics. We're dealing with psychology. This is all psychology. So when I be talking about the matrix, what I mean about the matrix is not about a conspiracy or anything. It's just really about, mind control. All these different tactics are created so that you could so to influence you to go spend your money, right? And you can't blame anybody if, well, basically you can't put the blame on them because it's your free will to choose to make the decision that you make. They give you the $1,200, they give you the money to influence you to go and spend the money. But with all the economic fallout, people losing their jobs, people are going to be more than likely trying to hold on to that money, right? So I believe that this first wave is not going to work out. They're going to have to do another wave. And the next wave will be, okay, depending on how situation is looking, can they contain this COVID situation by the second wave? And then maybe people will feel more optimistic about coming out and spending the money. The problem is that it's not going to stimulate because people are not going to spend the money. People already have money right now. You got to remember, we're coming off a tax season. A lot of people, if you look on Facebook, a lot of people talk about how they got their tax money. So people got the money. One of the problems is that people can't get the goods. We got supply chains that have actually been disrupted, right? So with the supply chain shocks, a lot of goods and things like that have been actually restricted. A lot of these companies are restricting people from being able to get the goods that you need. People still got the money, right? So it's not even necessarily that people are broke. You just can't go in and get 2 bags of, what do you call it? 2 bags of toilet paper right now, right? You need paper towels. Everything is limited, right? You can't get 2 packs of meat or 3 packs, whatever they have. Different stores have different limitations. But, under normal circumstances, most people would have been able to fill up their deep freezers and refrigerators with all the food so they can prepare. But what's happening is that it's restricting people's ability to be able to properly prepare for this kind of situation, which actually makes things even worse. So I would say, well, on one hand, government intervention, you think that is helping, but on another hand, it's not helping. And I say, for instance, one of the good things you could say is that, well, because they restricted it, is that older people can now get toilet paper to wipe their ass, right? Or they can get food, right? And that's a positive that you can see. But always know that if there's a positive, then there's a negative. So don't just be blind to the positive sides. The negative sides is I know a lot of families that are more than just 1 or 2 people. I know a lot of families that are like 4 or 5 people. I have a big family myself. So if you have a family that's 4 or 5 people versus an older person that's 1 person living by themselves and they can't get tissue, but this family of 4 or 5 people with teenagers who eat all the food and use tissue, 1 or 2 packs of meat is not enough to sustain that family. 1 thing of tissue is not enough to sustain that family. It may be enough to sustain this elderly person, but this family is now at a disadvantage. So then what happens? They have to make more frequent trips to the stores, to different stores, to try to find the goods that, if they have them available. A lot of times they are not available. Sometimes they have them at different times when they stock up and things like that. And it's a real tricky game. So it's still a nightmare, still a disaster. They got food lines around the country where, like bread lines, like how you used to have back in the Great Depression, where people are lining up to get food, people getting rice. And I've been to a lot of stores. I haven't even seen rice. You guys seen rice at stores? I haven't even seen rice. All this stuff, all the basic necessities are like sold out pretty much everywhere, so it's a nightmare, it's a nightmare. It's all gone. Yep. The banks in Philly are heavy. Okay, yeah. See, everybody say like, yeah. I mean, you already have the money, but you can't get the things that you need. So what good is it going to do? It's not going to stimulate spaghetti too. Food banks, yeah. See, everybody's telling me like, yo, that's why I tell people when you're dealing with, the markets. And we've been talking about this over a year. When I started studying economics, I learned about social indicators. See, a lot of stock guys just talk about stocks, right? And I used to be that way years ago. But then I started studying the top, the best, the biggest, macro investors, and started learning the ways of how they're able to manage money, how they're able to maneuver through the times of ups and downs. And I started learning about economics, and this stuff is real psychological stuff. And this is why a lot of this stuff is still up for debate now. It's a huge debate. So what's best for the people? What's best? What solutions are there? And I have my own conclusion, which may be different from other people. I can see both perspectives objectively. I know the Hayek School of Economics. I know the Chicago School of Economics and the Keynesian School of Economics and their thoughts and their theories about how they feel. And I have my own conclusion, right? And so I just share with you guys some of the things that I learned. And then I want you guys to be able to freely think. One of the things that's happening is that we're seeing a lot of suppression of free thought right now. So a lot of different things is happening. And this is a very dangerous time. It's a very dangerous time because you know, it's just terrible. And then we have a lot of news that's out there, the Facebooks and the YouTubes spreading a lot of information, but then it's also suppression of information, and so it's creating a lot of rifts, you know, between the people. So people are fighting with each other. I was actually in a debate earlier, right? And you guys know I love debating. The reason I like debating is because it helps me to learn. It's a form of learning for me. So sometimes I choose to engage, and sometimes I choose not to engage. Sometimes I engage to try to create algos to come to, you know, to promote some of our posts and things like that. Um, and so it's entertainment, but I like to extract information. I like to extract how other people think about views that I share. It helps me to understand and see things from their lens because I may not see it that way. But what I will learn from that debate is that someone else thinks differently from the way I think. Doesn't necessarily mean that they're right, or doesn't mean that they're wrong, or mean that I'm right, or mean that I'm wrong. It's just that I think that it's okay for people to have different opinions of different things. Right? We have all the greats debate, you know, point blank period. You know, again, I talk about Hayek and I talk about Keynes, they debate it. You know, these are huge debates, economic thoughts of what the market is going to go through. You know, we have guys that's debating now. So not afraid of debating. You guys know freedom of thought. As Americans, we have that right. So don't be afraid to think. Don't be afraid to speak of what you think. Don't let these shrills stop you, you know what I'm saying, from saying how you feel. If that's how you feel, that's how you feel. Point blank period. But again, that's why we got our own website so that we can't be suppressed by the YouTubes and the Facebooks, right? Speak how I want to speak on my own platform. Speaking of that, let me actually pull that up for you guys real quick, and then we'll go back into the markets real quick. But I wanted to show you guys this, right? And this is on our website if you guys don't know. Boom, there I go. I shared this with my members. Shared a couple of links here a while back. But this is actually from the master teacher. This is from Granddaddy Dalio. All right. So a lot of people, they haven't studied economics and things like that. And I understand some of it is way over your head. And so for me, it's important that I actually go get that information. And then I'm going to I'm going to tell you what I gathered from it. But then sometimes I wanted you guys to see it. And I want you guys to open up and say how you feel about it, right? It's not all about me. You know what I mean? We're a community. So I think that everybody should be able to have a voice. That's why with this new platform that we have, Wall Street Jackboyz, everybody has their own page and you have your own voice. And I want to encourage you guys to start using it. Okay. So anyhow, this is from Granddaddy Dalio. He talks about, and again, let me just say this real quick because I have a couple of people that want to debate and they want to talk about, X, Y, Z, but a lot of people that have no idea that I've been studying this for a long time. When we actually predicted the recession, the framework has already been out there, been a student of the game. Every week I show you guys the yield curve. We have our own yield curve where I man the data and I show you guys when that yield curve inverts, a recession happens 100% of the time. It inverted back in March when we predicted the recession to come, and we started seeing all these economic data that was very, very weak. We were projecting for the recession to come in 2020. Did we know it was the COVID situation? We didn't know the COVID was going to be the pin. No, we did not know it was going to be COVID, but we knew it was going to be something that was going to pop the bubbles, right? And I had actually gave a couple of lists of things that we were thinking. We were thinking it was going to be the situation with Iran, since we killed their most decorated general. We was thinking it was going to be North Korea situation, some kind of terrorist attack, whatever. We had lots of different things that were risk calculated, but we didn't calculate for the COVID. COVID, that's the situation. Either way, it still came in a time frame that we was projecting for to come. So therefore, we've been able to prepare, and we've been able to provide a lot of insight from that. But a lot of that framework came from Granddaddy Dalio, right? He's one of the top. He's the largest, macro investor. Bridgewater, that's the biggest hedge fund. I was telling one guy earlier, I guess when we had a debate, and I was telling him that his money isn't good enough for Ray Dalio. He was offended. He was like, why would you insult me like that? And I was like, I was telling the truth, bro. Like, my money isn't even good enough. You can't even have Granddaddy Dalio to manage your money. Yet he only managed the wealth of the very wealthiest people on the planet. You feel me? So it wasn't to insult. It was just to let them know, hey, you might want to pay attention to this guy. Because remember, wealth, it's always at the top first, and then income is afterwards. So you got to pay attention to how the wealth is moving. Anyway, he posted this. He has this framework he's actually given. He's releasing it every week. And why is it so important that we study guys like this? Somebody was saying, well, that's you if you want to go worship this man and this, that, and the third. People are always angry. Again, you can't, these people, so many people have opinions nowadays. You have to take it with a grain of salt, right? Because a lot of those people, haven't even studied the things that they actually want to debate. They just, just want to argue and they have nothing to back their claims. So this is what's important, right? You and I, we're not billionaires. Okay. None of you, if you was a billionaire, you wouldn't be in here right now. I'm not a billionaire, right? But these guys are billionaires. So because he's a billionaire, he has the type of money that buys him a lot of time that he can actually go sit down and study this stuff, right? He has analysts, he has these teams of analysts, and they're combing through all kind of data that none of us can get access to, and they have it. And so when they actually go through all this data and they're putting together these frameworks, they're trying to figure things out because it makes them a better company, so they can deliver alpha to their clients. And they have a very, very consistent record, right? They've been able to do that, for a whole lot, except for last year, which again, that was the markets melting up, so that was understandable. But when they put together this framework, he's telling about what he's learning about all these different times, and then how he sees it happen throughout history. So history is our teacher, basically. So the projections are based off of his history, how we see all these cycles, they happen over and over again, all these things come in alignment. But these are the things that he said. This was this past week. Now he's actually still studying. He's putting together a lot of this framework right now, live as we speak. His team, they're releasing all this information because it's a lot. But every week he's releasing what they're learning, and then he's providing insight. So what do we learn? He said the last period of destroying and restructuring happened in 1930 through 45. All right, that's the Great Depression. Okay, he's talking about the destruction of the whole financial system and rebuilding. He said this led to the new period of building that began in 1945, more specifically the 1930 to 45 depression, which was due to the breakdown and restructuring of the money and credit system, led to the new US dollar-based global monetary system, Bretton Woods, that was created in 1944. Now, the large wealth gaps that came about in the roaring 20s were narrowed by the Depression and war, which led to radical changes in how wealth and power were distributed, and the global war changed world leadership and the world order. So just pay attention to what he's saying. He's saying how all these things changed the world order, okay, from the Great Depression. Remember, we talk about this time that we're going through is the Greater Depression. So whenever this happens, the world order changes. And he's actually describing what he saw. And again, this guy, he's like, in his framework, his books before even this stuff, he went back in time, he's traded through these times and all the stuff that he learned. That's what he put together, these frameworks, right? And so he said that, so in 1945, there was a new beginning with a new money and credit system that was US dollar based, and a new world order that was the American world order. Okay, this is Granddaddy Dalio, not my words. I didn't make this up. Okay, that new American world order was the natural consequence of the US being the richest country. It then had 80% of the world's gold stock, and gold was then money. Well, gold is always money. Gold is real money. Okay, the dominant economic power, it then accounted for half of world production, and the dominant military power, it then had a monopoly on nuclear weapons and had the strongest conventional forces. It is now 75 years later, and conditions have evolved in a number of measurable ways that we will explore in subsequent chapters that will bring us up to date. Then we can attempt to squint into the future. So this is all real good. Do your homework on this, okay? We're not going to take up this whole session on this, but this is important to understand because this is the guy that's at the top of the food chain. A lot of people talk about Warren Buffett, but they don't know who Dalio is, okay? Warren Buffett is sitting back chilling. He's quiet right now. He hasn't bought anything right now, right? And he's going to be significant in this whole situation because once he steps into the game and starts buying, okay, then we should get a more substantial rally. Doesn't mean that it's going to be a sustained rally, but it'll be a more substantial rally once money sees Warren Buffett steps in and start buying things. Then people will start following. But most people don't know who Dalio is. This guy's a freaking genius. Warren Buffett said himself that he was just lucky. He was a white guy that was born at this time in these years and at the right place at the right time, right? He said if he was born black, if he was born a female, he would never be the guy he is today. I think that he's smart, nothing to take away from him. But just understand that this guy right here, Granddaddy Dalio, in my opinion, is a genius, right? Because if I had $1 billion or 18 billion like he has, I would do the same thing that he's doing, right? Hire the smartest people, build a team of people that can help you to navigate through these things. And he's giving us this framework. He's telling us about a whole new world order, the whole debt restructuring, a reset, a financial reset. So we actually need to go through a financial reset. We're going through a financial reset right now. And it's going to be a whole new ball game. So this is going to take some time to go through. I showed you guys through the charts before. Every recession takes at least 2 to 3 years to get through. I know people want it to clear up in a month or two. This is going to take us some time to get through. So my biggest advice for everybody is to survive. Okay. The key thing, beyond the stock market, beyond gold and silver, okay, is to survive, because there's a lot of things are shaking up the world right now. And so the biggest thing, the key thing is to survive it. Okay. Um, but this is again, this is from the big dog. This is from Granddaddy. Let me know if y'all understand what he's saying in this thing, and did you get any value from the insight? Now, this is just a snippet from the excerpt that he has. Let me actually pull it up just a tad. Let me pull up more. Here you go, right here. Here's the full thing. It is very, very long. Most people don't like to read. Therefore, many of you will never learn because you don't like to read. Okay. But I'm not blaming you. I'm just showing you, right? But take a look at this. This is very, very well documented and thought out, right? Let's not even mention the books that I have that I studied, right? He's given everything in this research, okay? And he's making it available for the public. So there's going to be people that will choose to learn this. There's going to be people that choose to not learn it. It's your free will, so it's your fault. You don't learn it, right? That's the way they always say it. So he's talking about all these empires and how they, collapse and they come and go in these different cycles, right? And so if you take a look at this one here, and I'm gonna go ahead and bring this to a close after I finish. I just want to show you guys this blue line right here is the United States, okay? And then the red line is China. What do you see? Well, here we have the U.S. came up, and the U.S. is now coming down in this cycle, okay? You see that? Here go China. It came from down, and China's coming up. Okay. So that means that, again, he's showing you how world powers, countries, this is over time. This is data. This is not opinion. Okay. This is not about political parties. This is nothing about patriotism or nothing. This is just data, objectively looking at things. When you seeing the crossover power, countries coming into power. Okay. You saw back here, the black line is UK, right? And then the UK fell, America came into power. Okay. And America's been dropping in power, right? So this, you hear Trump don't talk about make America great again. Well, this is what they're talking about, because it's always been a war, because China has the China 2025. Okay. So here you go. You have two powers that are beefing. Okay. Make America great again. And then China 2025. You haven't heard about that. That's been something that's been on the horizon, that China's supposed to overtake the US as the world power by 2025. And just looking at the data, that's the way it looked like it's going to be. Okay. I don't want it to be that way. Trust me. I love my country, but again, this is the framework we're looking at, objective data here, not opinion. This is what happens time over time. And you can see how all these things overlap. So you don't have to be a rocket scientist to read the charts. You look at the charts and now you can see clear as day what I'm showing you here, right? Let me know if you guys can see what's being displayed here in the charts. Okay. Let me know if you understand. If you don't understand, let me know. We'll go over it. Okay. The resource itself is Ray Dalio. This is Ray Dalio, Bridgewater. Okay. It's the largest, hedge fund manager, in the world. Okay. So again, he has lots of data scientists that's, helping him to put all this stuff together. It's not just him. This is his, Bridgewater Associates. These people are very, very smart. They have the time, they have the money, and they have the resources. They have access to data that none of us have access to. So when they actually provide it, and they provide it for free, okay, again, this is free, but most people wouldn't understand what to do with it. But he's providing a lot of tools for us to follow. It doesn't mean that it's going to be, the holy grail, but as far as frameworks, this is the best framework I've seen anywhere. And I know a lot of people, who's pretty much having the same, line of thought here, but he's attacking it objectively through data and history and putting it all together. And then at the end, he's going to provide his projection, but he's been talking about this for a very long time. So, yeah, that's that. So I just want to show you guys that. And it's available. I'll drop the link in. Anybody who wants to, somebody was asking about it, I'm going to drop the link here. You can go and follow that yourself, copy it, bookmark it, Again, he's releasing these every week. I want everybody to catch up with the data, catch up with the information. You don't have to depend on me to deliver it to you. Be a student of the game. Okay. So that's that. All right. All right. So again, it's coming from our website here. Let's put that up. All right. So with that being said, anybody got any questions on that? Does anyone have any questions? Anybody got any questions? No questions? Speak now, forever hold your peace. The outlook is very grim. I'm sure you guys can see that. That's the outlook. And so that's why my recommendation, if people are asking, what's your recommendation, is to survive, right? Let's go back a couple of weeks when people were asking what to buy, right? When people were asking what to buy, I had all those Instagram stars out there. They got millions of followers. Wall Street Jackboyz still trying to grow and get the truth out. And again, you got people that's giving out this information who don't even trade the markets, who don't know what's going on. We trade the markets every day, so we're very sensitive to what's going on a daily basis. A lot of these long-term people, they're not hands-on. They buy, hold, go to sleep, wake back up, and they say they know we're in a great depression, a greater depression, right? They don't know, but we know this every day. We're watching this, okay? So, what did we tell everybody? I told you guys the best bang for your buck was silver, right? So this is what I call silver back here when it hit our Fibonacci target, right? Right here at $12. This is where we got in at, okay? If you followed what we told you, then you should be making lots of money, okay? If you're a student of the game, then again, if you bought the courses, this would have paid for your courses. But this is a long-term investment, okay? We talking about buying hard assets, silver. This is what I was telling people. Everybody's saying buy stocks, buy stocks. Why? Because one of the first principles that you learn, and I don't know why, these guys who are in finance, whatever they claim that they're in, I don't know why they don't tell people that the risk with stocks, because stocks is a risk asset class. And if you took the stock foundation class in the Wall Street Jackboyz course, then you would know this, right? So we have a stock foundation course that's in there now. So you guys check it out if you haven't. But it tells you that stocks can go to zero. That means companies can go out of business. They can go bankrupt and go to zero. So the risk is that it goes to zero. So a lot of people say, hey, should I buy Boeing? Should I buy Carnival Cruise? Should I buy all these companies? Because they're going to come back. They're going to come back. You have all these idiots thinking that all these companies are coming back, and a lot of these companies are not coming back. Things will never be the same again. Okay? The life as we've known it, I told you guys when we were in the good times last year, I said, hey, this is the end of the good times. Stop spending your money, start saving. This was in 2019 when I was telling you. Okay? Now we're in the mess. Okay? And a lot of these companies, they are not going to make it out. And there's going to be, in fact, we had an article of a fund manager released saying, why bail out these billionaires, right? Because they're bailing out a lot of billionaires, right? Why bail them out, right? Let them fail. Because if you let them fail, there's going to be some smart young whippersnapper just trying to make it to the top of the league who understands how to work the data better than the old money knows how to do. And he's already sitting cash heavy, like Warren Buffett's sitting cash heavy. They got other guys that sitting cash heavy who are responsible with their money. And those companies that were not responsible with their money, they let their companies fail because those guys are going to come in and they're going to buy it up. And they're going to, consolidate. And then they're going to, bring all those people, those resources into their company, and they're going to take it to the next level. That's where it should go. But we have them just holding on to these companies that were irresponsible with their money. And think about it. When you're irresponsible with your money, do you get a bailout? Nope. But they get a bailout. So that's an interesting situation there, right? So just understand companies can go to zero. So even though you see in cheap prices, my message is that even though you see cheap prices, it doesn't mean that you're getting that stock at a discount, because if the stock can go to zero, then you're losing money. Okay. You lose your whole entire investment. So, don't be so quick to jump into anything, because the uncertainty is at an all-time high. Nobody knows anything what's going on right now. So uncertainty is this high. A lot of smart money don't like to play in this kind of game. They're trying to offload. And remember, you need dummies to make your money. Okay. We need people to pick up the bag. I'm trying to get out. So we got a lot of people that's trying to get out. And these big managers, these big money managers, they can't just sell it all out. They got to, dish it out in blocks. Okay. They can't get out like how you and I can get in and out of trades. They can't move that way. They got to drop blocks at a time. They're trying to offload their positions. They're trying to get out of Dodge. And that's the reason why we saw silver crash also. We had those margin calls that came through. right? When the stocks was going down, a lot of these guys are buying stocks on, on debt. They didn't have the money to cover it, so they sold the silver. This is why we had it crash in silver. They didn't want to sell the gold, of course. Why would you want to sell gold? You sell your silver first. So they sold that. That's why we had that crash. That was a phenomenon. So we caught that lick right there because what we know in reality when we study economics, also use your social indicators. Look at real life. Life isn't just about a chart. You can actually take a look at real life, match it up with the data that we're seeing, and then I make decisions based off of that. I'm not a genius. I don't think I'm a genius. I'm not an oracle or anything like that. I'm just using my sense. That's it. Anybody can do that. So when we caught that lick right here, that was the move. Now, paper silver again, you can get your hands on it, but real silver, I was telling go buy the real silver. We got real silver, right? Because you can't get your hands on it. So supply and demand. We're also looking at supply and demand. If there's no supply, you already know the demand is going way up. So the price has to go up. It will go up. It'll continue to go up. So that's what we're looking at with that. Let's see. So what I'm looking at overall in the market, let me just go back to, we had a couple of squeezes. If you guys can take a look here, I'm gonna just show you this real quick. Right here, this is the broader markets that we're looking at. You see all that red? This is right now as we speak, okay? The S&P is down, the NASDAQ is down, the Russell is down, the Dow Jones is down, oil is down, gold is slightly down, look like gold is gonna bounce. Silver is also slightly down right now. So pretty much everything is slightly down right now. Bonds is up, which is interesting. Bonds is up. That's interesting. So, with the markets being down right now, this is something that I wasn't expecting to be down with the news. The good news of OPEC being able to get everybody on board to cut the oil prices. When we take a look at oil, I don't see any setups on oil, right? And that's interesting. But when we take a look at the like the NASDAQ, right, you do see we have squeeze setups on that, which you would think that will fire long. So let's take a look. All right. So take a look at, we got the 618 resistance, which is this pink line right here. Okay. That's resistance. But then we also have all of our moving averages, including the 100 moving average at meeting at that same line. So this is actually giving me an indication of strong resistance at this level. We can see that resistance play all the way through here. Okay. So when we caught that bottom right here, we got to bounce up, and now we're up against strong resistance. Okay. So the test for this week and what it looks like is that the market is going to come back down. Okay. Doesn't mean that it will, but more than likely what we're seeing right now is that it should come down. This squeeze, it had a squeeze, which is a bull squeeze fire. Squeeze is firing long right now. And that's interesting because it's going short. So we look like we have a dud. We got momentum that's looking like it's starting to shift over at this portion here. We have the the overbought territory that we're in. So we're at an overbought territory. It's a light one. It could go higher. Normally we like to see it a little higher, but it's still at a high enough range that it should come back down, right? So if you use a MACD or stochastics, you can, use those tools to see these levels here. So, but the squeeze is just not really moving. So, again, Monday is going to be an observation day. Monday is an observation day to see how the markets, get that emotion out. Because what we were looking at was this inverse head and shoulders kind of deal, but it's looking like it's taking another fold and looking like it's starting to puke over. So we'll see how that plays out. So I'm expecting more downturn. Again, we don't have no fundamentals. We have anything, logical to make this thing go up. We have earnings coming up. So let's take a look at Russell also. So here we go. And in the markets, we have a lot of these prints in the markets. All throughout the markets, we got like these double bottoms, right? And these double bottom situations are supposed to be bullish, okay? You can find these all over the markets right now. And that's supposed to be a bullish setup, right? We had a buy trigger right here. But you have this 50 average right here, 50 moving average, which is a resistance level. So, it looked like it's trying to push up against resistance. We may see it push up against resistance and fold over, but maybe it'll fold over before then. But ideally, where you would like to have seen this move to go up is to this 100 resistance level. So this should be the key resistance. This is the strong resistance level. So again, the test is to see if we can get up to that 50. If not, then we come back down. It's just be an ugly chart pattern. But this is all over the markets. And you got to remember that the financials, heavily over here in the Russells, they're going to be reporting this week. and it's going to be a bloodbath. And so I think that I'm not too sure how Wall Street priced out these earnings. I'm pretty sure that they already expected to be bad, but I guess it's going to determine if it's as bad as they thought it would be, right? And so with this sensitive cycle, it's going to be bad news is good news, meaning that if the bad news isn't that bad, then you may get a rally, which is weird. But we've seen this over the past 2 years where the markets have been behaving in weird ways that they rally off of bad news, which is not the normal case. But remember, the markets is looking for, confidence. And you don't have the fundamentals to back it. You don't have the economics to back it. And so it's all about psychology to back it, like some kind of false hope. Hope. Last week the markets moved off of hopes of this situation of the deal with OPEC. Right? It was all hopes. So it was moving up based off of the hopes. They didn't come through until today. So, but yeah, so that's what I'm seeing here. What else? All right, so I think that with that being said, let me actually pull up the VIX real quick. I'll take a couple from you guys. Let's take a look at the VIX. Okay. So at the VIX also, in the same breath, we want to make sure you keep your eyes on this. What we're seeing is that the VIX is starting to floor right here at this 50 moving average. This looks like it's going to be the support. How do we know? Again, we got oversold territory that we're in right now. It's oversold territory. The momentum is sold off quite nicely, actually a strong sell-off. And what typically happens is you get a bounce back up. You normally get that bounce back up. So we don't see it happening yet. But what I'm looking at is we can test, but we're looking to see if it solidifies before it makes its move back up. Okay. So that's what we're seeing there. And again, because it's already oversold, there's too much selling here. So it's just another cautious week. Okay. It's another cautious week. Day traders will probably still rule this week. Swings are still going to be very difficult in this environment because we got earnings season that's kicking off. And depending on how these financials hold up, that's going to be the key to, going through the rest of the weeks that's coming throughout earnings season. So we got to see how that's going to happen. Let me see what you guys are talking about here. Excuse me. What questions can you ask? You ask any question you want to, Rex. Look up CD Project Red Stock. Tell me what you think. Cyberpunk company. Okay, it's interesting. Look it up if you can. Number one company at stock market in Poland right now. I think it's overpriced. Tell me what you think. They made one game and now they are higher than all of banks in Poland. Okay, higher than all the banks in Poland. Okay, check it. AV Pod hides top right of the chart, makes hard to follow. Okay, so to my viewers on the YouTube side, my apologies. You have to be in the chat, in our chat room, to actually get the full view. And when we actually publish this, when we publish it on YouTube, you'll get the full view when we publish it. So in our live chat room, everybody can see the full screen. So if you're on YouTube, then you're not going to get the full screen. So I definitely encourage you to join the live chat. And what I'll do is actually drop a link for you guys so that you can have access to that, where you guys can join our live chat room as well. Okay. Let me actually give them that link real quick. All right. Anybody else got anything else that you want to take a look at? And I'll see if we can get that one from the other guy I was asking. All right. It's been a crazy busy week, man. I'm telling you, the Rona has had me busy. So yeah, so you guys, if you're on the YouTube side, you see that link. That's how you join our chat room from that link, so you can get the full screen. So my apologies there. All right, okay. So BA's national defense, America will not allow them to fail. I mean, do you want to look at that chart or what you want to look at? What do you want to look at? Boeing, they contract. Anybody can contract with America. So Boeing is not a government. Boeing is a company just like any other company. All companies can go to zero. Kareem, all companies can go to zero. Understand that all companies can go to zero. So again, what you're seeing right now, when we take a look at earnings, the earnings multiples, the markets are still, from a fundamental evaluation, the markets are still overpriced. Overpriced. Let me take you back. Let me actually go back to a monthly chart. Okay, this is the monthly charts. So yeah, this is where Boeing is at right now. Can Boeing go further? That's the question. So if you're like optimistic about buying Boeing at $127 a share, when I say that Boeing can go to zero, zero is down here, and it has been that, it's been a long time since it's been down there. So I'm not saying that this is going to go to zero, but just understand that that is always a possibility with all public traded companies, that they can go zero. Not even public, private companies. All companies can go to zero. Okay. You take a look at companies, young companies that come up and they're doing, good. They're doing good work. Companies that are looking to probably take Boeing's place. They would like to get those government contracts that Boeing has. What's the other company? I think it's called Spirit. My pops used to build airplanes for them. Spirit is an upcoming company. You have all kind of companies that would love to take their, place. You got guys like Elon Musk, who has Tesla, right? Elon Musk, he's getting all these government contracts for space. I mean, you have all these, space companies who's been doing this before we've been alive. And now this guy's coming, he's getting all the contracts, right? He's doing all this stuff. That can happen. So don't get arrogant and thinking that none of these companies can fail. I just want you to understand that that's the risk. That's always a risk. You can look it up. Don't take my word for it. Look it up. Do your homework. All right. So even though you're looking at, hey, this is a cheap pricing. Yeah, it's a cheap price. But what's the consequences of this fallout? Right? What's the consequences of that? Right? It can come down. Right? So what if Boeing comes down to this level at $50, right? Under $50, and you bought it at 127, right? Well, that's your fault. Okay. You buying at the beginning of a recession, at the beginning of a depression, and instead of letting the market solidify before you get in, that's not how you play this. I know people telling you to average down and buy on the way down. That's stupid. Look at people average down like that, and then you got to wait, 20 freaking years before you make your money back because you was buying stupidly. No. What's the easier strategy? The easiest strategy is you let it bottom out, and then you see it come up. And once it gets above its moving averages, then you enter. This is what smart money does. So you people who have not skilled in trading, this is the opportunity that you're missing out on, right? You don't know how to get in. You don't know how to get out. You just listen to other people. Anybody who's traded knows you don't get in while this thing is falling down. That's stupid, okay? This is falling down. That's stupid. Let it, make a clear floor, all right? Let it hold its support. If it does that, and then you start to see it to come up off of it, then you have a trigger that's letting you know, hey, this is a better entry point for me to get in. I can get Boeing around 128, 20, you can't really time the most perfect bottom. What you're trying to do is gauge that range. You're trying to gauge, hey, did that floor hold, right? So that's what we use our indicators to do, and I've been able to do that very, very well, when I bought my shares of Apple at like $90 a share, I was able to time that. So yeah, you can't like perfectly time, but you can make it, like he said, like Stan says, you can't time, but you can use the technicals to make a better and informed trade. Thank you, Stan. That's what we're trying to say. You use the technicals, not people's words, not some Instagram person who says, oh, this, that, and the third. You got to come to the charts. The same way we're looking right now. This is a monthly chart, okay? You look at the charts, you take a look at it. You take a look at the fundamentals. You also got to look at the macro, what's happening in the environment right now, right? We know that we're going through cycles. I just read to you guys Ray Dalio's whole little thing situation, what he's saying is happening. What did you learn from it, right? If he's saying that this whole system has to be reset, that means life as you know it will never be the same. So some of the companies is at the top now don't mean they're going to be at the top when this thing rebuild. We don't know. The level of uncertainty is very, very high. But what we do know is that gold and silver will never go to zero ever because that's real money. So when I was telling you guys that's what I was buying, I was literally buying that. And now a lot of places you can't even get it from right now. All right. So we have a group that's on our website, a gold and silver group. So if you're not in there, go check it out. I got resources in there, people that we're able to buy from. But a lot of your places locally, you can't get it from. Even the people I was buying from weeks ago, they have now shut down the gold and coin shop because it's not an essential business. Guns and ammo is still selling, but they can't open their gold and silver shop. So they still actually got gold and silver in the vaults, but you can't get your hands on it, right? the demand is high. This is basic economics, supply and demand. So we taking, this is the way I use this. I don't know how other people trade, but this is the way I'm looking at the economics. I'm looking at the fundamentals of the financials, and then I'm looking at the charts. I'm also looking at social indicators as well, right? So when we was talking, I was showing you guys pictures. You follow my Facebook and everything. I'm showing pictures throughout real life before COVID hit. Homeless, record levels of people that was homeless, right? And they was having signs saying, "Don't even give to the people." And you see people just lined up. I mean, use your eyes at the same time is what I'm saying. It's not just about a chart, but we're using all this so we can make executive decisions. BA is a long-term trade. 1 year better. BA is not a day trade. Okay. I mean, whatever excuse you want to tell yourself, Kareem, I'm showing you the charts. I'm just saying. I mean, maybe a year from now, maybe you're right, buddy. I don't know. Is this the best entry for you right now? Do you think that this is the best entry? You think catching the falling knife is the best entry? You think buying, as they say, average down, buy on the way down? That's what the smart guys are telling you. You think that was smart? Again, I'm open for debate. I'm not God. Everybody has a voice, and I welcome it. But again, it doesn't mean anything, right? We're just taking a look at it. So buy as you will. I showed you what I was buying, and you see how that's making money right now. You see that? I showed you, right? So yeah, I showed you what I'm actually buying, right? So I'm taking a look at all these indicators, and I got a great entry point. As a trader, my entries are great. I know how to enter and I know how to exit. And I'm 50%. Okay, good. Oh, taking positions in ATVI. Okay, yeah, Justin, I saw you post these last week. Let's take a look. Activision Blizzard. Yeah, so again, this is another interesting play. ATVI, we got Nvidia. These are tech stocks. We got the Nasdaq with a squeeze, but as we're looking at this squeeze right now, it looks like it's firing a dud. And remember, the technicals, the indicators, they're not 100% accurate, right? But we look for at least about a 70% accuracy with the tool itself. So not every squeeze fire long. So just keep that in mind. Is that we have the squeeze in here, and normally that is a bullish indicator. I mean, we like to see that squeeze. And the squeeze on the index also. So we got the squeeze on the index as well. We got the squeeze here, but the squeeze is fizzling out. It's fizzling out on that, and so I just don't have confidence in this setup to play out to its targets up here. Not as of right now. Maybe it will, but I just don't see it right now. Yeah, so I don't really have a range on this right now. I'm just because the squeeze is throwing me off, and so when I have indicators that throw me off, I kind of just throw it out. You're more than welcome to do whatever you want to do on that. I would say that the iron condor, for me, I'm staying away from it. For iron condor is definitely probably better than you just buying a straight up long call, right? Because if you buy that long call and this thing's chopping around, theta is going to eat your ass alive, But if you sell a spread, sell a, iron condor, you'll be able to, get through time. As long as it trade in that range, then you'll make your money, right? So you have a range, however long you make it, that's what the iron condor is set up for. So, all right, cool. Yeah, I mean, I like the setup last week when you called it, but it was the squeeze didn't fire. So conflicting signals on the squeeze there on the Nasdaq, that's kind of throwing me off as well. So that's why I don't have that much confidence in that setup right now. And the same thing with the Nvidia. Same thing with Nvidia. These are tech stocks. People was trying to, people made their money off of it the week before, banging on people being trapped in the house. And then we had Zoom that just, went down. People was banging off of Zoom, but then you got people that's hacking, all kind of drama that's going on Zoom. So that play out didn't play out either. So yeah, it's a lot of conflicting situations right now. Again, thinking short-term mindset right now, more of day trading style right now versus the swings. The swings are not going to work out with this level of volatility. You have to think more short-term right now. Day trades. Remember, if you don't have a account size, you could do three-day trades every rolling 5-day period. So you get 3 of those. Again, if you can get 20% in one day, man, take it. That's how I feel about it. Selling puts, but to your point, I think you want to set up this call size spread. Okay, yeah. Ron, my man Ron. I know Ron got some flame. Tyson's food. Okay, so this situation is interesting. I actually do like this setup right here, Ron. Um, if you take a look at it, see how I want to do it. We got the 50 moving average right here at the top. Again, it's a counter trend trade, right? Because it's the trend is down, but we can see it moving up within this thing here, up to the 50, which is $65 target up ahead. So $5 move. That sounds about right. Consumer staples have been, doing what they do because people are buying consumer staples. Versus Boeing, people are not flying planes right now, but people got to eat. And Tyson Food, these are one of those companies. It's got the whole, setup here. We got a technical setup and we got some levels up ahead. So 65 is the target up ahead. Again, I like this to a more short side play. So if the markets, rally up, consumer staples, again, they've been doing what they do for the most part. Selling covered calls and collecting options premium has been working as well. But you got to remember, you can't sell covered calls unless you own the stock itself. So that's for people that own the stocks, you long holders. You long holders. Most people don't have their money tied up in the stocks. I have long side. Okay. All right. So what they're saying on the tube. My man, he did say something. What did he say? CD Project Red. What's the stock ticker there? Dude from Poland. We got a guy from Poland. What's good with you, my man? Do you I don't even know if that's in the US equities markets. AV Pod. Okay. On the YouTube side. I don't really know if that's in the US market, so I can't pull it up here on my platform, buddy. Okay. Yeah. So again, we just take a look at the banks, see how they're gonna do, and they're right there in the spot. Um, but yeah, I don't like what I'm seeing right now, so just taking it easy right now. Just taking it easy. All right. We'll go ahead and bring that to a close then, since you guys don't have anything else. And if I find any setups throughout the week, we'll be posting them in our website, on my page. You guys will see anything that I'm looking at. We'll be posting. If you're looking at anything, make sure you post it on your page. We got groups. Make sure you connect with other people. You can see the posts from people that you're connected with. Are you loving it? Oh, thanks, Keith. I appreciate it, man. Like, you guys haven't seen the new platform, make sure you check it out. Wallstreetjackboyz.com. And still building. Again, I've been busy working on this right now. Remember, safety first, survival first. Make sure you gotta live. You feel me? You gotta live. So survive first. Money's always gonna be able to be made here. This is the new website, the new platform for you guys that don't know. All right, we'll check out my timeline. This is what it looked like. All right. So we post, you guys can post here, post your pictures or whatever you're looking at, blah, blah, blah. Right. Here we go. Trump, Putin, Saudi crown prince scramble to fix oil markets. Yeah. So we don't need a Facebook. We don't need a YouTube and all that. We get down right here on our website. Courses right up in here. Right. You go through the courses if you want to learn, but that's what it looks like. It's at wallstreetjackboyz.com. So if you guys haven't seen that, check it out. All right. All right. So with that being said, man, hey, we'll bring it to a close. Y'all have a good weekend and we'll catch up in the markets this week. Peace.